Ladies and gentlemen, good day, and welcome to the Finolex Industries Limited Q4 FY26 earnings conference call hosted by ICICI Securities Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Arun Baid from ICICI Securities Limited. Thank you, and over to you, sir.
Thank you, Julius. Good afternoon, ladies and gentlemen. On behalf of ICICI Securities, I welcome you all to the Q4 FY26 post-result con call of Finolex Industries. From the management side, we have Mr. Udit Agarwal, Managing Director, and Mr. Chandan Verma, CFO. Now I hand over the call to Mr. Udit for his opening remarks, post which we'll open the floor for Q&A. Over to you, Udit.
Thank you. Thanks, Arun, and good afternoon, ladies and gentlemen. Welcome to Finolex Industries earnings calls for quarter 4 and for the full financial year 25-26. We are very pleased to have you here today with us. Just a reminder to everyone that during the course of this call, there might be certain forward-looking statements based on our current view. However, the actual results may be different, may differ. Coming back to our quarter 4 of FY26 performance, we had a 12% growth on year-on-year on the revenue, and the revenue for the quarter 4 is stood at 1,314 crore rupees. Okay, as compared to the quarter 4 of FY25 of 1,172 crores. Okay. EBITDA, we had a significant improvement. It nearly doubled to rupees 332 crores from 171 crores the previous year quarter, and as a result, there is a margin improvement of 25%. Profit before tax rose 65%. To 334 crores from 203 crores in quarter 4 of FY25, and correspondingly there is EBIT jump also from 144 crores of Q4 FY25 to 306 crores of Q4 FY26. During the course of the quarter, the volume was broadly flat for us, and this quarter our volume was 1,01,770 tons versus 1,02,253 tons of the quarter 4 FY25. Moving on to the full year 25-26 performance, we had a flat revenue of 4,113 crores against FY25 of 4,142 crores. The lower volume which we had during the course of the year were offset by the better realizations. Yeah, that's why we see the revenue broadly flat. As we discussed in quarter 4, has an impact on the full year performance also. Our EBITDA was up 43% to 679 crores. Okay. Our EBIT grew 55% to 572 crores during the course of the year. The sales volumes for the full year is stood at 332,736 metric tons against 3,47,982 metric tons in the previous year. We continue to have a very strong balance sheet with a net free cash of about 2,563 crores. I want to come back to one of the topics which is impacting all of us, which is the Middle East conflict and what has it been for us. As we all know, since the start of the conflict, there has been major macroeconomic changes around the world, and particularly in the downstream of oil, which is the petrochemical industry and PVC markets. So disruptions which are also happening because large volume of oil flows through the Strait of Hormuz. Yeah, and this creates the bottleneck for the across the polymer value chain, and it's not only the PVC, all other polymer prices also saw a significant increase during the course of the last couple of months. So while this led to higher prices, it means also a little better realizations for us. So this is near-term positive for integrated producers like us, but the supply uncertainty and cost inflation remains risk, but which we continue to monitor very, very closely. Also on the demand supply side, if we talk about the PVC demand in India follows a very well established seasonal pattern. Pre-monsoon, typically we see uptake in demand because of the agri-demand going up ahead of the Kharif season, and then the moderation starts during the monsoon. Okay. I think with this, I would like to conclude my opening remarks and would like to open the floor for question and answers. Thank you.
Thank you. We'll now begin the question and answer session. Anyone who wishes to ask question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Sneha from Nuvama. Please go ahead.
Hi, team. Thanks a lot for the opportunity. Just a couple of questions from mine. Firstly, what would be the quantum of the inventory gain in this particular quarter?
Chandan, you want to take that?
Sneha, good afternoon. So we have, as like the other PVC pipe producer, we have also the inventory gain during the quarter, during the month of April, March, when the prices have gone high. It ranges amount roughly around to on an average 35 to 40 crores around.
Understood. My second question was related to volume growth. What we were also hearing from the other plastic producers was there was a good amount of restocking which took place, because of which, of course, the volume was much higher. And of course, we are seeing consolidation. We saw good growth coming in from leaders as well. Why was our volume growth flattish for this particular quarter?
Okay. So, Sneha, as you know, our roughly around 65 to 70% volume comes from the agri sector. And this time we have seen that the agri demand is not taking uplift during Q4. So on an overall basis, though the quarter-on-quarter volume has remained flat, but we have seen a reduction in volume in agri and increase in volume in non-agri. So overall, the volume has remained flat, but the dragging is mainly happened on account of agri volume not getting picked up. Because the farmer they were also anticipating that the prices, because the prices volatility, they were anticipating that there will be some softening the prices. And that anticipation, the volume could not be picked up as it used to happen in the earlier quarter, in the corresponding quarter of the last year.
How has agri-demand picked up in the month of April and May? How are we seeing the trend? Any guidance that you would like to give? And lastly, if I even adjust the 50 crores EBITDA, 50 crores inventory gain, your EBITDA margin comes out to be significantly higher than what we've seen for last 8-9 quarters. How sustainable are these margins? I think that's it.
Neha, see, as we know, we are also we have the backward integration facility of PVC resin manufacturing. So there is always a few cost advantages that we enjoy. So based on that, our procurement planning and all that we have in place, so we have enjoyed certain benefit, and that has given us the margin. Overall, the kind of margin that you have seen during the current quarter is obviously certainly at a higher side, but going forward is going to moderate to some extent.
Any guidance?
Guidance, more or less, you can say lower double digit around.
Understood. And on the volume front, how agri part, or how has April and May month? Yeah.
We lost you in between. Volume front?
So the other question was that have you seen pickup in the month of April and May with respect to agri pipe volume, and any annual guidance with respect to volume growth?
April was a little subdued month, because the prices were pretty high. In the month of March, and prices started coming down. So really, in a falling market, it has a straight impact on the demand. So April was a pretty subdued, but we see a little better May.
Got that, sir. And any guidance, sir, for the annual for FY27?
There's so many things going around, both on the supply side and also on the demand side. But I would say structurally, I would look at as GDP one of the indicators of our growth, and which also is several constituents to it. Agri is one of those, construction industry is another, and how the government spend on some of the growth drivers which government has said, for example, extending the Jal Jeevan Mission, and how that allocation happening during the course of the year will define what kind of a demand growth we can see.
Understood. Thanks a lot, sir. I'll get back in the queue.
Thank you. The next question is from the line of Praneet from SJ Investment. Please go ahead.
Hi, sir. Thank you for the opportunity. I was just wondering, in terms of the demand, how is it on the ground level? As I understand that the Q4 was not so great because of the rapid price hike, but in terms of, let's say, consolidation in the market, especially in the agri space, how has it been in terms of competition and other things?
Sorry, I could not completely understand your question. Can you come again?
Yes, sir. Am I audible right now?
Yeah.
I was asking, sir, in terms of competition overall in the agri space right now, how has it been, and how is the customer demand sentiment besides the Q4 rapid price spike? Like, is there any consolidation, and how is the overall market competitive process? Because some of our players are getting a little more aggressive on track. So just wondering what's happening on the ground.
No, the story is different for everybody, because the ratio or the dependence on the agri market everybody's is different. We have been predominantly in the agri side relatively stronger as compared to the non-agri side, and so the impact cannot exactly be like to like compared. But coming back to your question of what is going on the ground, as we said, the April was a subdued month in terms of the demand. May looks to be slightly better, also because of the agri demand, which has kind of come back a little bit ahead of the monsoons, and a lot will depend on what happens to the monsoon. We already know that monsoon are kind of getting delayed, this year, which was supposed to happen like nowadays, these days in Kerala, but got extended by another week or 10 days. So I hope that in the month of, as we move forward into month of June, at least at some part of the June, there is continued demand on the ground.
Understood, sir. I was just wondering, in terms of, let's say, players like regional players like Vicky and Jain have also been gaining their market share. I was wondering, has this been affecting us? Was it at the cost of us or at the other players?
See, Jain irrigation plays in the micro irrigation market, so this is not a complete direct like-to-like comparison with us. So that's what I said in the beginning of my response to a question, that everybody has a different positioning in the market and which market segment do they play.
Got it. So just one last question. I understand that we're still very concentrated on the agri space, right? Is there any strategy in terms of meaningfully shifting away from agri to, let's say, other products? Because we are still extremely highly regarded in agri space, but I'm pretty sure that the bank can also cancel it to other segments. So what's the strategy for that?
Yeah, I mean, we have been constantly pushing our trying to diversify our portfolio in terms of the market segments. So there's been slight improvement year on year. If you look at FY25, 67% was agri, and if we look at FY26, we are at about 63%. So really the non-agri segment share is also increasing in our portfolio. So yes, there is a gradual shift, and as we have been saying in the past, in the previous calls also, there's a constant effort in this direction. And our goal is to have a much more balanced business coming from the two distinct market segments.
So let's say, what is the ideal split the management wants for the next 3 to 4 years? Is there any internally targeted metric?
I would say more like ideal case for us would be more like 50-50. Yeah. Over the next 4 to 5 years.
Got it, sir. And one last question regarding the market. I understand that you're still market leaders. So in terms of market shares, has there been any growth, especially with the market going down? Are you able to gain market share gains over the last year or the year before that? Could you give some guidance on that?
No, I don't think so. What we have been doing so far is trying to manage the market share and also looking at the margin growth. So our positioning is slightly different from what other players are doing in the market. And you see that clearly reflected in our numbers also.
Got it, sir. But could you explain the strategies that are going behind the margin growth? I understand you're being more selective. So, but in terms of how are we exactly growing the margins by maintaining our market share? Is it lesser credit terms or higher prices? Could you give some light onto that?
So it's a basically continuous process. See, in margin improvement, there are a lot of things and a lot of dynamics come into picture how we are procuring, how we are managing our margin. It's our procurement strategy, at what time we are placing the market, at which point we are putting some schemes and discounts in the market, then at what point in time, which geography we are concentrating. See, margin is not a result that we are seeing, it is not a result of a single factor. It's a combination of various factors that we keep, that are at our constant radar. So that's how we try to protect the margin currently, and going forward also the endeavor is on.
I understand that it's very dynamic factor, and we're very competitive in that. I'm just wondering for this specific year and this specific quarter, what were the major contributing factors? I understand that it changes time to time depending on the market.
Yeah, so
I'm just wondering.
The result that you have seen, basically it's a result of whatever the factor that I just described you. It is a combination of all the factors. It is very difficult to pinpoint how the margin has came on for a particular initiative. But yes, it's a combination of all the factors that you have seen.
Understood, sir. That's very helpful. In terms of geographical
Sorry for
expansion.
interrupting, Mr. Parani, sir. Could you please rejoin?
Yeah, I'll just come back and queue. Thank you so much.
Thank you. The next question is from the line of Shravan Shah from Dolat Capital. Please go ahead.
Yeah, thank you, and congrats on good set of numbers. I have a couple of questions. Just for sir, can you share the agri? You have shared the 63%. So for fourth quarter, it comes around 62%. What was the CPV share in the volume and fitting share for fourth quarter, and possible for fourth quarter of last year and maybe the full year FY 25-26, if you can share both the CPVC share and the fitting share.
Thanks, Shravan, for the question. And I think Chandan has the numbers handy with him.
So CPVC share on overall portfolio, it comes out to be roughly around 7 to 8% during the current quarter, and last year it was roughly around 6 to 7%. So it hovers around roughly around 6 to 7%, and currently 7 to 8%. And on a year-on year basis, this is at the same 7 to 8% range on overall volume.
Okay, and fitting share, sir?
So fitting share in total business is roughly around 90 to 10 is the ratio that we maintain.
Sorry, sir, I didn't get 12% is the fitting share.
90 to 10%. So 90 is the pipe and 10 is the fitting. That's what you wanted to understand, right?
Yeah, so in the fourth quarter, the fitting was 10% share.
Yeah, fourth quarter is 9%, and last year also it was 9%. On a yearly basis, overall year basis, full year the fittings share on a overall volume is 11%, and last year it was 10%.
Okay, got it. Now, sir, first, just wanted to again try to understand this EBITDA margin, because this is the sharpest positive surprise that has come. Whatever you have tried to answer, still not able to understand. Even if 35-40 crore, the inventory gain, if we adjust, it comes around 22% odd margin for fourth quarter. And how... So first, though you said that we are backward integrated, but still able to understand furthermore. And now, let's say in the Q1, given the April, we have seen the significant PVC prices as dropping down, and in May, maybe a 4 odd rupees, again, it has bounced back. So how one can look at this margin? And so, do we still will see such a kind of a 10% kind of a volatility in the EBITDA margin going forward also? How on a yearly basis can we see it, the full year, FY26 is 16.5%. Can we see 14% plus kind of a margin is doable on a sustainable, or a 16% plus is doable?
So Shravan, I have just explained to another question few minutes back. So on a yearly basis, we have a target to maintain our EBITDA margin on a mid to lower double digits. Roughly around, that is our target. So we will continue to put...
Sorry, sir. Lower double digit means a significant range. So just that's why I'm trying to understand.
Lower double digits, so you can say sub 15 number.
Okay, sub 15 number. Okay. So, but it should be the originally we were till last time we were looking at 12% kind of a sustainable.
That's
so
what
now
that's what I'm saying. Sub 15 number with anywhere, it's very difficult to pinpoint at the so dynamic environment. So we are trying to keep the maintain our margin sub 15 level, EBITDA margin.
Yeah. So we are talking on the EBITDA margin. So in Q1 itself also, can we see the similar, or still the number could be much higher in the Q1 also?
So as Shravan, as I told you, our endeavor is to see margin of the year-on-year basis, full year basis. We'll try to maintain, but let's see how the quarter progresses. As you know, April is some subdued month. We have said, everyone is aware. So let's see how the May and June goes. Then we will be able to comment upon. Yearly basis, we have the target to sub 15 level, roughly somewhere around.
Okay. And on the volume growth front, so this year, obviously on a yearly basis, 4.4% degrowth, but on the fourth quarter QOQ, sharp jump is there. So you have mentioned that the April was subdued, May was better. So how one can look at on a yearly basis, the volume growth, but at the same time, wanted to understand in terms of what's our capacity and how we want to add, because till last time we were saying 50,000-80,000 kind of or 50,000-80,000 ton capacity on a yearly basis will keep on adding.
So Shravan, our total capacity at this moment is 520,000. So we have a sufficient headroom to grow still. So current year, and I think most probably next year also will be sufficient to close with the current volume. Number one. Number two, your second question, one part of the question of how you are seeing your yearly target. So definitely we are seeing targeting a growth number of roughly around higher single digit to lower double digit. This growth we are targeting for the upcoming full year, not on a quarter and quarter, this full year we are targeting.
Got it. And then in terms of then the capex would be of 100-200 kind of a number, and the cash, because for last many times we are saying that we will reward the shareholders, but timing is not clear. The board will decide. So I'm still wondering when that time will come.
So yes, you are rightly said. Every year we are going to incur the capex of roughly around 100 odd crore every year. This is more on account of our maintenance capex that we'll keep doing. We'll be debottlenecking process is already on, where lower capacity extruder get replaced with the higher capacity extruder going forward in time. That process already we have also explained in our earlier call. That process is already on. Number one. So as all the shareholder must be happy that last year also we have declared a huge dividend of 3.60 per share, and this time also 2.75 per share. Yes, we have the huge cash balance in hand, but still, even our yesterday's discussion with the board, still the decision regarding the remaining cash is yet to come. So we'll have to see. Time will tell.
Okay. And any specific reason, though the number is lower in terms of the finance cost for this quarter, from third quarter 3 crore to 7.8 crore, any specific reason, and how at the same time the other income from 52 odd crore, so for 3 quarters it was kind of a 58 crore and then came to 36 crore. So is it just just wanted to know the reason and how one can do this thing.
Other income largely consists of mark-to-market gain on the investment portfolio that we are having. So you have seen March, May, there is a decline. Market has gone for a lower trajectory. So that's why the mark-to-market in game has came down. Number one. Number two, finance cost has gone up. So you see, because of this geopolitical scenario, we have been planning to keep our inventory at the optimal level. So that resulted into the optimum purchase of procurement of material, number one, and that has got converted into over the period in time in borrowing. So that has resulted into certain higher cost. Short-term basis.
Okay. No issues. Thank you and all the best, sir.
Thank you, Sawan.
Thank you. The next question is from the line of Praveen Shah from PL Capital. Please go ahead.
Yeah, hi sir. Praveen Shah from PL Capital. My question is related to the capacity. So capacity of 5,20,000, what you had said, and if there is no expansion, is there a constant? The capacity is become a constant for a volume growth? Because if I look at last quarter and the utilization rate were very high of some 78-80% of the utilization. So is that the constant for a growth for you right now?
No. So capacity is not a constraint for the growth. As Mr. Chandan Verma mentioned in the response to one of the earlier questions, is that there is a constant capex planning of 125 to 100 to 200 crores, which we have been always saying. So this year also we would be also spending substantial amount into the capacity augmentation. As you mentioned, changing the lines from a lower capacity to the higher capacity. So that also leads to the capacity expansion. I mean, having additional capacity available for production. So certainly capacity availability is not a constraint for growth.
Okay. Second question is related to the inventory, because answering to the earlier question as well, you had highlighted that the inventory number has increased. So is that assume that's because there is a lot of volatility in the PVC resin prices? We had created an inventory of RM for a future use.
Yeah. So also you need to. It's a regular activity. So it's a regular activity where whenever we find the opportune time. So opportune time to procure the inventory at the suitable prices, then definitely we try to hold up take the inventory, take that inventory in our stock. So that is the strategy that we have been following, and that is how you see the inventory level at 31st March. Current inventory level is also the result of that strategy that we are following.
And because there is a lot of volatility from the March onwards, we have seen in the PVC resin prices. So at what level, those inventories has been built up is also, just wanted to understand on that, because if that is on the higher side, then we will, then after there is a good correction in the prices also. So how you are comfortably, built up your inventory actually?
So, Shravan, just to say, we are constantly keeping a watch. We understand that PVC market is too dynamic, and we will be holding a higher inventory, and that is going to be a dent on the future period. So, keeping all the dynamics in mind, we have the sufficient control over the inventory number that we are having. So, I don't want to quote any number regarding how we are seeing its impact on the subsequent quarter, but yes, we are mindful of the thing that PVC prices can go for any direction. So, keeping that risk in mind, we have the we optimal level.
Okay. Another on the demand side, because also you had mentioned, and in the past we had seen that the PVC resin prices always impacted the agri-demand in the past. And still, if I look at some, the prices of a PVC resin is at a elevated level of nearly around 87 rupees, 85 to 87 rupees per kg. So, how in the May actually you are seeing the demand is coming back even after the higher prices? Is that still quite a softer, or it's coming back with strongly because the prices from 115 now has a down? So can you give some color? Because from the last year of 65, 70 rupees, now we are at a very high level of pricing. So how the agri demand is actually stepping up?
Yeah, so two parts of it which you touched very rightly. Yeah, I mean, so yes, if you compare it to the last year, the absolute value seems to be higher, but if you compare it to the high of March, yeah, it is significantly lower. I think it is 25-27% lower. Okay, so that is one of the factors when farmers or the agri demand is being considered. The other is that this is the season time. Okay, so the inherent demand which is there, which is independent of the pricing, that is also there. Okay, so combination of both these two factors.
Okay.
Yeah.
And some bookkeeping questions are, how is the BCM PVC spread for a quarter? And at this point, how is the PVC resin prices or the spread, PVC-EDC spread right now, not the quarter Q4, but right now?
So Q4 PVC-EDC spread was $521, and Q4 average I'm talking, and also PVC prices on in the international market, it was average around 793, and currently we have seen a PVC-EDC spread around 543, and the prices somewhere around $900+ in the international market. It's latest price.
Okay, and VCM, sir? PVC-VCM?
PVC-VCM spread is currently is $108. Currently is at $108, and last Q4 average is somewhere around $179. $179, $180.
Oh, thank you, sir. Thank you, and all the best.
Thank you. The next question is from the line of Pujan Shah from Molecule Ventures. Please go ahead.
Hello. Hello.
Yeah.
Yeah. Okay. Sir, my question pertains to the. So first of all, I just want to get a sense on the government regulation side. So,
sorry to interrupt you, but your voice is not very clear. Can you come closer to the mouthpiece, please, Mike?
Am I clear now, sir? Hello.
Better. Thank you.
Okay. Thank you. So my question pertains to the government regulation. So we, as an industry, previously we have been struggling for 1.5 years, and considering the demand scenario, and we also, industry has also filed the ADD, but it didn't implement it. While just want to understand, if we file the ADD again, do they understand the impact which has happened in the March that might decline the ADD purpose, because at that point of time the prices were at a high prices compared to the historical average? So can you give a sense, is that a possible way we should get an ADD, or we might go for a shorter term purposes like MIP, which might be helpful for a 6 months duration?
I think on the ADD front, we all know, what happened. So, and there is also there is a cooling period in between the two investigations which needs to be there. Okay, so that's on ADD. I don't think right now there is a case for ADD per se. But this is again very much one view of looking at it. The other topic which you talked about, other kind of protections, which can be given to the industry. Certainly MIP is one of those, however short term it might be. You also know that the government announced a 90 days period of no import duty on PVC resin starting April till 30th of June. So that is also giving, probably rightfully so also, to the lot of medium and small enterprises. And this is, I'm talking about all polymers, not only for PVC. PVC is also among that. We know how is the structure of our pipe producers here in India. And so that has impacted the large players like us, and that's how we also saw a sudden drop in the prices of PVC in the month of April. Okay, so government policy certainly has an impact on what happens on the business side. So, but I think on a short-term basis, MIP could be a good option if industry decides to move forward, and I think that is a separate topic which CPMA, the Petrochemicals Manufacturers Association, is separately pursuing.
Got it, sir.
We see ourselves as a leading pipe producer, and that remains our position as far as all these matters are concerned.
Got it, sir. And secondly, our revenue concentration is a bit on the higher side on the Agri-demand. And this year we have been expecting that there is an 8% less rainfall compared to the previous year. So how we have been planning to tackle that? Do you see some kind of degrowth in Agri which can offset in non-Agri space? And how we are planning to get strategies for this year to get our double-digit growth?
So as we have been telling, there is a forecast of lower monsoon also that you have just said, and also the prices of the demand of Agri is always monsoon dependent. But as we have said in the earlier question, since our thrust is to put more and more emphasis on our non-Agri sector, so there will be partly whatever the projection that we are going to have in the upcoming quarter, it is going to be any loss if we are going to incur in the Agri sector, this time we will compensate with the non-Agri space.
Got it, sir. That's all from my side. Thank you so much.
Thank you. The next question is from the line of Vipul Kumar from Sumangal Investment. Please go ahead.
Hi, sir. So you said this VCM delta was $170 in last quarter, and right now it is 108. Have I understood it correctly?
Yes.
So half of your capacity is VCM based. So this quarter there would be a substantial pressure on profitability. Is that understanding correct?
Yes, to some extent you are correct. But yes, the delta is currently you are seeing the impact of current pricing. But yes, we are trying to. Our discussion is already on to have the proper VCM at the optimum prices. So that we are also trying to have the inventory.
No, but whatever you are getting at a market price, but if the spread is lower, naturally your profitability will be affected, no? And half of your capacity is VCM based.
So you need to appreciate the point that you are saying, the number you are saying is a point in time. Let's see how the number goes over the period and over the quarter. So we have seen the 179 average has came down to 102, yes. But it is at a certain point in time at the beginning of the quarter, it was also at the 180 or 190 level of the last quarter.
So average will be higher. That is what you are trying to say, sir.
Yes.
Oh, okay. And why we are not seeing any substantial growth in volume contribution of CPVC and fittings? Because they have become stagnant over last certain years.
No, but you'll have to see our fitting in overall fitting share in overall basis is gone up on a yearly basis. So last year our fitting share in our total volume was 10%. It is little up by 11 plus percent during the current year. So this is on an overall basis. And if you see the growth of fitting alone, the growth of fitting alone is somewhere around 9 to 10%. So that is our focus is here in the fitting.
Oh, okay. So fitting will continue to grow at 9 to 10%. Is that understanding correct?
Yes.
And same applies to CPVC also?
CPVC, in fact, you see, though we have the lower base of the CPVC, but CPVC are growing at a higher pace. It's roughly around 15 to 18% of range. Sorry, 8 to 9% of range.
No. Would you repeat? It was a little confusing.
So we have a CPVC, we have a lower volume, lower base. So our growth of CPVC fitting is higher again. In CPVC fitting, our growth is higher, and overall CPVC portfolio is going around 8 to 9%. CPVC portfolio as a whole. I think I have clarified your question. If I'm
yes, sir. Thank you very much. And any plan to return the cash to the shareholders, sir?
So I have just replied to this question. So this question, these things will come from the board, and still the board couldn't given us guidance how to utilize this cash. So let's wait for the time. So whatever the dividend that we have given, that is definitely out of the current accrual. But yes, the accumulated cash we have, the board will give certain guidance.
So one final request to Mr. Chabaria, if you can convey our request. It has been long since he has attended any call, and this question is asked every time. So at least for one call, if he can attend, it will be really helpful. Please convey our request to Mr. Chabaria.
Yes, definitely will convey your message.
Thank you, sir.
Thank you.
Thank you. The next question is from the line of Anu Parak from Anand Rathi. Please go ahead.
Yeah, hi sir. Am I audible?
Yes, we can hear you, but I have fainted voice. Can you come closer to the mic, please?
Yeah, am I audible now?
Yeah, it's better now.
Yeah. So so first question is, what proportion of VCM quantity sourced from Middle East region, and whether a PVC resin production is likely to get impacted in FY27 in case the geopolitical issue persists for the next, say, 3 to 6 months?
Yeah, the Middle East has been the large supplier to India for VCM. Yeah. So there has been an impact. Yeah. At the same time, coming to the next part of your question, will we see an impact for the full year? As you might already know that during the monsoon period, our jetty is not operational. So we do not run the VCM line during those periods. So in any case, it remains closed. Yeah. So for that period, 4 to 5 months period, we are not impacted because of this. Because structurally, we cannot bring in any VCM into our facilities. Okay. Our efforts are on to shift our supply chains. Yeah. From Middle East to the other parts, particularly looking at Far East, yeah, and Northeast Asia, where VCM is available. Okay. And the good thing is that if we are not able to get competitively VCM, the PVC is available in Northeast Asia and also in US. Okay. and it's only the 50% of the total imports in India come from China, and rest of it comes from other parts of the world into India. So there is already established PVC supply chain. Yeah. So we don't see any impact on the PVC availability for the course of the year.
Okay. And so second question is, the Finolex's average EBITDA margin has been in the range of 17.5% over the past 10 years. And since our share of non-agri pipe is also going to gradually go up, so this is going to enhance the margin profile of the company. Then, so why are you guiding a conservative EBITDA margin at sub 15% level for FY27?
So we don't want to give any rosy picture at this moment because of the geopolitical scenario. The future is always see a uncertainty. So that's why we are giving a conservative margin, and let's try to deliver at the higher margin towards the year end.
Yeah, and this number is over long term, what you mentioned. Yeah, and we are talking about here a relatively shorter period of time, which would be greatly impacted by the volatility in the market. So that's why a little conservative estimate. But you are right. I mean, we have been around that range, 15 to 17% over time.
Yes, sir, but we have clocked 17% in FY26, which was a difficult year.
No, it was a difficult year, but if you look at the full year, the quarter 4 was the major game changer. If you look at the first 9 months of the quarter, first 9 months of the year, and then it's a different picture. It's the quarter 4 which has really changed.
And sir, the last question would be, what is the reason that all other listed plastic pipe companies are looking forward to geographically expand their manufacturing footprint and expand their product portfolio, but we are pursuing a different strategy and delivering weak volume growth compared to them? So don't you think that we should reevaluate a capital allocation policy so that we can at least maintain our market share in the pipe segment going forward?
See, there are two parts of it. Yeah. One is the cost to the customer. Yeah. As long as that is competitive, customers will continue to buy. Yeah. And with the increased or better transport infrastructure available in the country, the distance are becoming shorter and shorter. I should say the impact of the distance is becoming less and less. Earlier, it would probably 5 years back, 7 years back, it would take probably 5 days from Ratnagiri to go to the material to the east of India. Now it reaches there on the third day. Yeah. So that strategic advantage of being a local is slowly diminishing. Okay. And that's the reason we think that if we are able to serve our customers all over India from our current production base, we would be able to also manage our cost better and also serve the customers within a reasonable amount of time in terms of delivery.
But sir, our existing strategy seems to be not working, so why are we not thinking of changing it?
You need to see, there are two things that we have to keep in mind. Like even if you go for another capacity at some other location, it will be difficult to cater all the product and SKU from the single location, number one. Then the balance SKU we need to source from the other location where we have the presence. So definitely again it is going to create hindrances, number one. Number two, as you know, we are currently a largely agri-focused segment, and non-agri we are going to increase our share over in time. So as the product portfolio of non-agri will go, and if you will find the suitable opportunity, then definitely we will look for the certain other geography at this moment. I think currently, and particularly the volume decline in the agri you have seen. Basically, you see, agri has always a homogeneous growth trajectory. If it goes always in tandem with how the monsoon scenario works in the country, right? So if there will be healthy monsoon, we will see a sharp jump in the agri-demand again. So see, this is something where no one has any control over that. So that's how we are seeing our business. And if you find our opportunity over the period in time, so then we'll have to look for then we'll definitely relook our strategy for the decentralization.
Okay, sir. That's it from my side.
Thank you. The next question is from the line of Mehul Shah from Nayan Vala Securities Limited. Please go ahead.
Hello. Am I audible?
Yes,
Yeah,
sir. Please go ahead, sir.
So what is the capacity utilization for FY25 and FY26?
So currently, FY26, we have the utilization of 67%. And last year, though, since we have added few capacity this year, Q1 of the current year, so last year we have a higher utilization of 71%.
Sorry, sir?
So last year, we have ended with our capacity of 492,000. So based on that, our utilization was 71%. Current year, we have the capacity of 520,000. So based on that, our utilization is 67%.
Okay. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Praneet from SJ Investment. Please go ahead.
आप जिस व्यक्ति से बात कर रहे हैं.
The next question is from the line of Shravan Shah from Dolat Capital. Please go ahead.
Hi, sir. Sir, broadly, if I have to look at the price difference and maybe ultimately the margin difference between the agri and non-agri for us, how one can look at?
So this number definitely margin, there is a gap in the agri and non-agri realization and margin both, but we do not disclose in the public.
Okay. Now, the point is, I am not asking a specific number, what's the price difference or the margin difference, but the range would be a decently higher, let's say on the margin front.
The non-agri has a higher margin than the agri. That's what I can comment maximum.
Yeah. No. So the point is that given the significant, even the previous participant was also trying, because for last many times we are not able to distribute the cash. So there are 2-3 ways, because this agri is always depend on the monsoon. Nobody knows how this will pan out after 3, 5, 7 years. So if we want to have build a brand, so obviously we need to have a higher share in the non-agri. That's what even we are trying, but the pace is on the lower side. So how, as a company, given that we have the cash, why can't we have a more team, maybe the different manufacturing setup at 2-3 places? Because with this 2,600 crore kind of a cash, we can definitely add at 2-3 places easily. And then keep on increasing both in the CPVC and the fittings. Even fitting capacity is also very less for us. So these are the 4-5 ways in terms of the project level. Also, we can keep on increasing our share. So that becomes also it is kind of a recurring kind of a demand, or for us, and also at a higher margin, higher realization, we can have a better brand. So that's the way. So understand.
Yeah, Shravan, thanks for the multi-pronged approach and the discussion which you want to get into. First is our penetration in the market, and so as you know, historically, agri is predominantly for us the west and south, but non-agri we are expanding rapidly into other regions as well. Okay, so we have the required number of salespeople, which we need in other parts as well. As you know that this is also, which you touched upon in your question, is also the project business. So there is a life cycle to that, and so we have to live with that. So that's the structure, that you need to get the product specified, and as the construction progresses, the demand starts flowing. and most of our business is through channel. Okay. And so it would be hard to say for which project how much have we supplied. But yes, this is one of the non-agri is one of the area where we see that if we have to balance our portfolio, and this is what we also mentioned in the beginning of the call, that we are looking at over time for a balanced portfolio between agri and non-agri. Some of the topics which you touched upon, having a diversified or a multi-locational manufacturing footprint, I think we touched upon that earlier. Mr. Chandan Verma has been able to give a very elaborate explanation to that, to why we adopt a particular strategy. Okay. And but yes, the opportunity is greater in non-agri.
Okay.
And
Thank you.
that's where our focus also has been.
Yeah, but just the pace of effort and the outcome or the result is yet to be seen. So that's what the investor wants. And given the kind of a cash we have, so that's the only request, suggestion, feedback, whatever.
Thank you.
Thank you.
Thank you. Ladies and gentlemen, we take this as a last question. I now hand the conference over to the management for the closing comments.
Thank you all who participated in our call. I must say that the questions which were asked by you are very, very pertinent, and I must say they are very well researched also. Okay, and we'll continue to put in our best efforts as a company to meet the expectations of the shareholders and the investors. I hope to see you next time for our Q1 FY27 conference call. Okay. Thank you. Thank you for your continued interest in Finolex Industries.
Thank you so much to all the participants and showing your continuous interest and belief in the strength that Finolex is having. We are delighted to see your questions and insight that you bring in the investors call, and we will keep to our your expectation to the extent it is possible. Thank you so much to all of you.
Thank you, sir. On behalf of ICICI Securities, that concludes this conference. Thank you for joining us. You may now disconnect your lines.